Volatility is starting to pick up in the stock market, and with volatility comes opportunity, and that can both be negative as well as positive for us traders, and we need to capitalize on that as best as possible. So in today's video, I'm going to talk about first a possible setup on the S&P 500 for this week, and then after that I'm going to talk about a Tesla setup as well that is flow backed, because we saw a lot of call flow with a ton of premium, as you can see over here, from just last Friday alone. So going into the video here, we can see there is a valid range on the S&P 500 at the moment. Right around 516.50 is the lower end of this range, and then near the top would be around 522.40, which also happens to be a key dark pool print, hence why I had this level. Technically speaking, if you wanted to make this more so of a range, you would go all the way up here to where this previous high is, around 524, and keep this as just a tentative level at the moment. I prefer to use these large dark pool prints if they're near a high, because from a bias perspective, if we can get back above what was clearly a large sell order up here, then that can switch the bias to the bull side, because we're not still below where that level is. That's just why I use that. And I'm sure a lot of people are wondering why I chose this 516.50 level instead of all the way down here for the low that we had on Thursday during the sell-off, which would be around 513-ish. The reason I chose this is because this is the lowest level that was respected before we had this drastic sell-off, followed by a very quick upside afterwards. I wouldn't characterize anything below this to be that critical to the overall range. Over here, it was tested without that excess volatility. We saw that upside afterwards. Here, very short blip below. So I'm going to continue to use this 516.50 level. If we were to break below, very likely this gap over here fills. If this gap fills, that likely leads to more downside, because that shows that upside momentum is not there anymore. So that's why I have the range the way that I have it. Now, as for a setup for this week, once we see either a break below this 516.50 level or a break above roughly this 522.40 level, there will be a new trend in the market. And the new trend will also be very large. The reason I know that is because we've been consolidating now for quite a while. Even in this short-term consolidation range, it's been a couple weeks that we've been stuck between both of these levels. It's even more so on QQQ. I'll show you that very briefly here. You can see we've been stuck in the same range for about 2 months. You can see all of this right here. This is very extended in the grand scheme of things. Super unusual to see a large index like the NASDAQ consolidate for as long as it has. Once it breaks, again, either above the range or below the range, we're going to see a massive move. My personal bias is towards the downside, but just because my bias is to the downside doesn't mean that I have to take a setup at the moment. I rather wait for that confirmation signal, which would be a break below the range, roughly around 434. If we break below that, there can be a lot more downside. I'm targeting 408. But again, I need to see that trigger. I need to see us break below roughly 434 to warrant that setup. Now, going back to the S&P 500, very similar to what I shared you on QQQ for a break below, confirming further downside. I'm going to use that principle here on the S&P 500. A break below 516.50 with an hourly close would confirm to me that we're likely going to see, one, this gap from over here from last week fill, and then two, if this gap fills, that, like I said earlier, is a halt to that upward momentum, and we're likely going to see further downside after. So I'm watching 516.50 as a bearish bias if we're able to close below. I always look for candle confirmation. The longer the candle, the better. I realize sometimes when it's very volatile, it's probably better to use shorter term candles like 15 minutes. But since we're still up here all the way around 5,200 on the S&P 500, I'm willing to wait for that hourly confirmation. I don't like looking at the 1 minute chart or 5 minute chart. It's way too short in the grand scheme of things. And you see a lot of fake outs on those candles as well. So I'm watching for an hourly close below here for a possible short setup. An hourly close back above would be my stop. Remember, using a stop is critical. You always need to understand your risk and potential reward when going into a setup before you enter that setup, since this is all a profession of risk. Now, that is for the downside. As for the upside, again, it can be a bit more difficult with both of these levels here, but generally speaking, if we can get above 522.40, we're likely going to see more so of a large scale breakout to trend to the upside, probably into the 530s on the S&P 500, just based on how long we've been consolidating for. So same principle, hourly close above 522.40 this week, and we can see further upside. Now, one caveat to all of this here, Personally, I'd like to see this happen very early, like Monday, for example, of this week. And the reason I say that is because we have CPI on Wednesday. That can shake up a lot of things. There's going to be excess volatility. We've already seen excess volatility going into this event. So afterwards, this can shake up a lot of things. So if there's a setup on Monday, it gives it about 2 days time before CPI comes out to have a follow through move. Otherwise, if this is something that, let's say, it goes above 522.40 with an hour left in the session on Tuesday, I'm not going to take that setup because there's so much overnight risk with something like CPI that can move the market 1, maybe even 2% that following day and then open all the way down here. Maybe if this was a fake out up here, because CPI brings a lot of risk to the market. So I rather see this either happen very early in the week or happen after CPI, which again is Wednesday morning at 8:30 Eastern. So if we open above or below one of these levels and it holds for the first hour on Wednesday after CPI, then there's still a valid setup as well. So I'm watching for this below/above of range here for the next confirmation signal for a new trend to emerge for this week. So that's the first setup I wanted to share. And the second one is this Tesla chart over here. Very interesting on Tesla. And the reason I say that is I'll use the box over here. We're in a valid demand zone at the moment, a very basic demand zone. As you can see here, this is where we bounced from before. This is also where we picked up in the short term over here. And then we had that fake news, according to Elon, on Friday of last week, where we also saw it get supported off of this demand zone. What's interesting about this is very good from a risk reward basis. Risk is relatively minuscule compared to potential reward, which I'd characterize as going all the way back up to around 180, at least in the short term, as long as this box can hold. Now, the risk here, let's say we closed over here roughly about 165. Below the box is about 160. It's about 5 points of risk for a lot more, about 15 here of potential reward on a zone that's already shown us that it's willing to support price. Not only that, we also had a lot of supportive flow, like I showed you earlier in this video, with a little bit more of a longer term expiration. This isn't just short term. This shows me that whales are starting to enter for more so of a longer term horizon, at least intra year. And the reason I say that's good is because Tesla's been getting beaten this entire year. It's down about 30% or more just in this year alone, and we're only a quarter into the year. So the fact that whales are starting to get more comfortable with these longer expiration setups is something we haven't seen yet, and that can be promising for this to form a bottom around here. Now, as for when I enter a setup like this, I actually want to wait till after CPI. The reason I say that is because similar to the S&P 500, there's a lot of event risk in a ticker like Tesla going into CPI. I also want to make sure that early this week, this zone is still getting supported, because if we go down below this zone, whether it be after CPI or maybe even before, then that can make things a bit more difficult here. This zone needs to hold. Otherwise, if it's not able to, this is going to see even more downside, which may sound crazy, but these bulls are likely betting on this demand zone holding, whether we know that they're following the technicals or not. I would assume, at least for a lot of the trade setups to the bull side that are within this range here, they're likely betting on this low to hold at the moment. Otherwise, they'll get out of their position for relatively small risk in comparison, like I said earlier, to potential reward of 180 and 180 plus, at least on a long-term horizon for this year. So that's something that I'm looking at. Again, it's probably better to be a bit more patient with this setup compared to the S&P 500, just because of how weak Tesla has been this year. This is a promising potential bottom that we have so far, but really we need to see follow through throughout this week and then post CPI to warrant that potential entry. Now, last thing I want to share in today's video, dark pool levels from last week. We saw a decent amount overall, and a filter up here on Cheddar Flow to the beginning of last week to the end, so April 1st to April 5th. And as we scroll down here, you can see 2.7 billion at 523.49. Nothing too insane, but definitely a decent amount. Here's where it gets a bit more interesting. 3.5 billion, 1.5 billion, and almost a billion right after, all within 3 cents of each other, about 522.44. So this is definitely an eye-catching level, and this is also, if you go back to over here where I applied this level at 522.40, I went a little bit below where this high print was. So again, we had the 522.42 as the lower end of the range, and then technically speaking, you could also take this 522.40 level for the 242. So I did it at the lowest amount over here. The reason being, these are all very close to each other. So if I do see a candle close for the hourly above 522.40, then I'm willing to take that position. Just gives me a better sense of where the lower end of that very small range is. That's why I applied it as 522.40 on my chart here. This is a lot of premium. So again, if we can see upside to above that level, that becomes a little bit more bullish because this was undoubtedly a form of a sell order. You could see here we did sell off very soon after this order came through last week. So it's in the bull's best interest to get above this as quick as possible. Otherwise, bears are able to capitalize on being below a lot of these prints. And if they're able to break 516.50, like I shared earlier in this video, we can see a lot more downside afterwards. Going back over to here, you can see nothing too crazy around the 520s. And then we get to 519.30. We saw 3.6 billion in premium. Again, anything over 3 billion in premium is unusual. These are levels you do want to monitor. Under 3 billion, like especially in the 2 to 3 billion range, is decent. Anything under 2 billion is nothing crazy. So we're seeing a lot of these 3 billion prints is certainly eye-catching. We closed below this on last week, but this is still a key level. As I scroll down from here, 1.8 billion, nothing too crazy. 1.9 billion, same thing for that. And then going all the way to the bottom over here, we had a measly 1.6 billion at the 512.91 level. So really what I see based on this is when we had this sell-off, very aggressive sell-off over here, and we went all the way down to the high 512s, there wasn't that much buying based on the dark pools, at least that we can see so far. 1.6 billion in the grand scheme of things, nothing too crazy compared to what I showed you earlier, 3.6 billion, all the way up here, 5 billion plus in this range alone. This is a lot more interesting to me, and this is likely sell pressure that we're seeing overhead. So hence why it's so critical that bulls get above this level as soon as possible. Otherwise, there's going to be a lot of sell pressure overhead, and that can lead to more downside, especially if this 516.50 level breaks in the near term. So this is what I'm watching for this week. I'm excited to see this uptick in volatility because, again, that leads to an opportunity for us traders. And other than that, I will see you guys in the next video.